Hello, welcome to our session on the UK payments landscape. I'm Debbie Bell-Hosking, and with me is Chris Dunne of VocaLink.
Good afternoon.
Hello. Chris, with a new regulator in the UK payments industry, times are uncertain. VocaLink and Finextra have issued a survey looking at faster payments, access, competitiveness, and KYC. And in this report, they find that various players in the UK financial industry are eager to connect to faster payments. So, Chris, what has been the block in the past and what's been done now to allow more access?
First thing to say is it's not surprising that people have been demanding to access faster payments. It is the biggest competitive differentiator for a bank. If your customer is able to access faster payments, they can send and receive payments immediately. If they can't, then that's a big difference. And with the advent of increased switching, it becomes a competitive differentiator. So there's much more in the way of demand for people to be able to access directly. Now, there are a number of barriers, technical being the least of them, I think. So you need to be able to send and receive real-time payments. You need to be able to access effectively the fire hose of very, very fast payments, and you need to have an infrastructure that can cope with that. That's one aspect. Other aspects are very much around the amount of collateral you need to put up, the way settlement takes place, and the scheme accreditation rules. Now, we as VocaLink can address some of those issues around the technical access, as can other people. It's a competitive market space. The others are being looked at very much by the Faster Payments Scheme and by the Bank of England in terms of how they grant access to the settlement accounts that are needed to be able to make faster payments.
So back to the report, there is one finding that's a little bit contradictory. It says around 2/3 of organisations believe that they are meeting the current KYC requirements. And yet, on the other hand, about the same amount of organisations value the establishment of a central KYC utility. So, Chris, why do you think there is this contradiction?
I think it's not so much of a contradiction that everybody has to do KYC. You have to meet the regulatory requirements to know your customer. So, for all banks, all financial institutions, they need to go through this exercise. And some find it quite difficult, some find it easier, and some find it a sort of competitive advantage. There's one bank I'm aware of, treat it as purely an area where they can win customers. They say you can walk into their branch, you can complete your KYC, you can be given a debit card, you can walk out in a matter of quarter of an hour, 20 minutes. Other banks find it much more difficult, but at the bottom of all of it is there are some basic requirements for me to be able to know as a bank that you are Debbie, you're not somebody else. So there is a level that's collaborative, a level that is simply what we all need to do to establish that entity, and that's where we see the value in a central database. And certainly when you look across the world, there are 2 or 3 places where for corporates there is becoming a KYC database. We think there's a space in the UK for a similar database, both for personal and for corporate customers.
Now, in terms of competitiveness, the report also says that UK competitiveness will continue to increase with the new payments regulation and initiatives like switching accounts. Now, Chris, how do you see the UK payments landscape in the future, say 2025? So
what we've seen with the advent of the current account switch service is switching rates have gone up. Not hugely, but still it's a material increase. It's about 19% year on year. So by the first anniversary of the CAS service, just over 1 million people had moved their bank accounts. But that's still only a couple of percent of the bank account population. So what we have seen is an increase in new entrants, so new banks coming into the market, and there's a long tail of people going through the access process to get their banking license. So if you wind forward to 2025, what we expect to see is a much broader landscape of the existing big banks. They will still be with us, but a tail of regional banks, smaller banks, very specific banks around, for example, online-only access, no branches at all. I think also we expect to see far fewer bank branches. So at the moment, bank branches are in decline. There were figures from RBS recently said that they experienced 30% fewer visits than they did a number of years ago, and this is reflected across, I think, all banks. So we expect to see fewer branches, and as a result, more and more reliance on online services, and in particular, online access through your mobile device, so through tablets and through mobile. So we expect to see more and smaller banks. We expect to see fewer branches of those banks, more access through mobile devices in particular. And when you look at the back end, at the moment there are a number of different bits of payments infrastructure. A lot of it is legacy from many, many years ago. We expect by 2025, so effectively 10 years from now, to see a unified, simplified whole where, frankly, you just have a push payment or a pull payment, a debit or a credit. You can send immediate payments, you can send in bulk payments, but this division between how you clear a cheque, how you clear backs, how you clear faster payments, how you do some kind of traps payments may well have disappeared by 10 years' time.
So faster payments, the future?
Up and up. If you look at year-on-year figures to the end of July, volumes are up by just about a quarter. So that's at a time when cheque volumes have dropped by 11% and backs direct credit volumes are flat. So it's the star child at the moment. It's the growth story, and it's going to continue going up and up because that volume is very much driven by you and I using those mobile banking applications. I'm sending money to you, you're sending money to me, I'm paying the dog sit, and we're doing it using faster payments instead of cash or cheques. And going forward, we see more and more small businesses using it for paying employee salaries, for paying suppliers, finding all sorts of different uses we hadn't originally thought of. So I think the future for faster payments is very, very bright, and that's why I think, going back to the first question, more and more people want to access.
Thank you, Chris. On that positive note, thank you for joining us.
Thank you.
And thank you for watching.